Good evening, folks. Joe Baker with Trade Pilot Pro doing your nightly market analysis as well as the intraday S&P pivots for our intraday trading. Right now we're going to look at what has transpired. I do apologize for last night's video. I don't know what happened. I produced it and I put it on and it continued to say processing but never processed. So I apologize. It was a fairly good video. I had said that the 56 area between the 56 and 62 would be an area of indecision. A break over 62 would totally put the bears at a disadvantage and we would get a really good run. That we did, and I do apologize for that video. But I want to say, as I mentioned before, bear market rallies are fierce. They are fierce, they're fast, they're furious, and that is exactly what we saw today. Now, where are we now? That being said, today's over with and done with, but what do we do tomorrow? Let's go back in history and let's take a look at what has transpired when certain indicators were at certain levels in the past. Here we see, we're going to go with the kind of the topping pattern on our triple moving average. And here we have a topping pattern, and as we see, the market tended to drift right back down after a fairly substantial rally from this level here up into this level here. Now keep in mind, all that being said, we were under the 200-day moving average, so the major trend was down. Here, okay, we had kind of a topping pattern again, and we came down, and this is what we call our advanced moving average. And when this gets under price, it typically kind of lifts the market and the market's ready for a rise. If it gets overpriced, the market tends to fall. So here we are, we're under price, we're getting a roll here, and we're getting lower lows on our momentum. However, we were making higher lows here, so we had what we consider positive divergence here. Now, we also had a topping pattern here, but never pulled back and only went higher. However, again, we had the positive divergence on this momentum oscillator. Bringing over to July 23rd, we had a topping pattern again, albeit look at the negative divergence, and the market did get over the 200 and proceeded to roll back down again. Here we have a pattern that stops out around the 1249 area, and again we have 1232 to the lower side, but again positive divergence, made a lower low but made a higher high on our triple moving average. And again, advanced MA underneath, price tends to lift the market. Now we're here. What are we going to do now? Okay, here is our last prior high, which is right about here, folks, right about where we are. And we came in around 1292, which, you know, I've said that's a big number. Now look, we've got negative divergence starting to roll here. A break of the 1292, I think we could get a serious push. However, just above 1292 we have 1304. So don't get too excited at this point. We are in this trading channel, I said, between 56 and 92.50. I said that all last week and I'm saying it again. We are in a trading channel, albeit we make 300 points in one day. That's what bear market rallies do. So until we get over the 1292, we are still in a range, and I just wanted to point this negative divergence out to you. Now if we come out and go sideways and work off this overbought condition, then we could get the next leg up for the next run. And then if we get over 1304, we're looking at 1315 up to 1330, which would be nice. It kind of puts everybody in a good mood. Oil prices are down, and you know, maybe people will start spending again, and we won't have such this talk of depression constantly. Again, us in the room, we don't care. We go both sides, long and short, all throughout the day. But again, it does put people in a better mood when you're looking at the markets when they're green. Okay, let's get over to the S&Ps. Just want to make a note of the overall market. Watch out for this negative divergence, and sideways move will work off the overbought condition of the market for the next leg up, or we will roll right back down if we can't take out this 1292. Okay, let's go to the intraday pivots. Okay, here we are, folks. Line in the sand for tomorrow will be 1281.75. Again, 1281.75. I'm looking for higher prices. 1286.50 above the 1281.75 would be a level of resistance. Our breakout level comes in at 1289. We have level of resistance at 1295, 1298.75. 1301.75 is our ultimate target, and then 1304.75 for an extension. There's that 1304 again. Below 1281.75, I'm looking for lower prices at 1278.75, a breakdown at 1276.50, 1272.50 underneath, 1266.75, ultimate target 1263.50, and extension of 1260.75. Again, folks, please sign up for our nightly newsletter, as I will be hopefully formatting that I should say on this weekend, and I will be getting these levels out in printable format for you, so you can use these next to your computer if you do trade the S&Ps, or just for overall market strength or weakness if you do trade equities or some of the index funds. Okay, folks, again, I apologize for last night's video. Unfortunately, my line in the sand last night was 1252.50, and we took that out and we never saw it again. So again, I do apologize. I don't know why that happened, but hopefully this one will get out with no problem. All right, folks, take care, and I'll talk to you tomorrow.